Hello everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Talking Points for the week ending October 22nd, 2021. Let's talk about stocks. The major equities indices rose across the globe with the S&P 500 advancing 1.66%, the Russell 2000 added 1.14%, and the NASDAQ rose 1.3%. Meanwhile, the international developed markets, the EFA rose 0.63%, and the emerging markets was up 0.75%. Now, within the U.S., growth outperformed value and mid-caps outperformed other stocks by market capitalization. Real estate and healthcare were the best performing sectors, while communication and service materials were the laggards. A little bit about fixed income. Federal Reserve Chair Jerome Powell said it is time to begin tapering the Fed's monthly asset purchases and warned that inflation is likely to remain elevated into 2022. The yield curve continued to flatten, reflecting concerns about the rate of economic growth and persistence of inflation. The two-year 10-year Treasury rates rose 7 basis points each to 0.48 and 1.66% respectively, while the 30-year edged up 3 basis points to 2.08. We are seeing this inflation. More and more people are saying, yes, it's going to stick around for a little while. Some are even talking hyperinflation. We are going to see it. It's not going to come down. Supply chains are still bottlenecked. It's still happening. So get your Christmas shopping done right now. Who knows what's going to be on the shelves? And let's just not panic. We're going to be okay. We don't have to do with everything. We can just do without some things, right? We're going to be all right. So talk about the price of West Texas crude oil. Achieved its 9th consecutive week of gains based on front month contracts, the longest streak going back to 1983, after Wednesday report that the U.S. crude inventories fell for the first time in 4 weeks, down by 400,000 barrels for the week, mid-October. This was less than consensus expectations for a 2 million barrel drop, which of course we had our own pipeline and we're self-efficient, but we don't have that anymore. So now we have to go to OPEC Plus for oil, which is unbelievable why our gas is going up where it shouldn't. Also, hold on to natural gas. You're seeing it up already this year. You'll notice that when you start to turn your heat on, if you haven't already, you're going to start to see that it's going to be a little bit more too. That's up almost 100% year to date. You don't see that a lot out there, but it is up. So check your prices there. Let's talk about economic data. China reported 4.9% year-over-year growth in the third quarter, a big slowdown from the 7.9% recorded in the second quarter as construction output slowed. U.S. industrial production fell 1.3% last month, below consensus expectations, after moving down 0.1% in August. Now, output was previously reported to have risen 0.4% in August. In September, production of motor vehicles and parts fell 7.2%, as shortages of semiconductors continued to hobble operations, while factory output elsewhere declined 0.3%. I know this is happening right now. We're seeing more and more semiconductors come out. We're starting to see it lighten up a little bit. It's going to be time though. Let's talk about company news. Abbott Laboratories, which is a core select holding, reported sales and earnings that were well ahead of expectations, driven by their at-home COVID-19 test kits and heart-related medical devices. Now, management also raised earnings guidance for their full year, and shares rose 7.8% for the week. Canonian Phillips, which is a G40 holding, which is international, obviously, reported earnings that were well ahead of expectations despite a small revenue shortage versus consensus expectations, and shares rose 7.85% for the week. Now, Snap, which is a G33 holding, declined following disappointing revenues and earnings, together with lower guidance for coming quarter. This provider of camera applications, which allow people to communicate through short video, Snapchat, right, saw a shortfall in revenues derived from advertising on its app as those customers face supply chain disruptions, product shortages, and shares were down 28% for the week, which is a huge drop. So that is it for the week. Thank you so much for being part of the ARA family. If you want to contact us, of course, please feel free to give us a call at 855-756-5700 or visit us at aradvisorsinc.com. God bless you, and we will see you next video.